What's up, everyone? Taiki here. Welcome to the Crypto Market Wizards podcast. Today, I'm joined by Zero X Law. How are you doing today?
I'm pretty good. Thanks for having me on, man.
Yeah, of course. I think you're a pretty good guest to have on because you have a crazy journey. Getting we're starting from 5K up to now roughly low eight figures in crypto. So, can you just tell me how you got started in crypto and just tell me about your story?
Yeah, of course. So how I got started in crypto was I actually saw a TikTok about Wonderland Time. This was kind of after like the whole Olympus DAO fork craze kind of died down, and basically I joined a Discord to basically kind of make fun of people for buying into like a blatant Ponzi scheme. Yeah, pretty much. From there, I realized that there was like pretty heavy value disconnects between like the treasuries of a lot of these like protocols, pretty much the actual like valuations that they were trading at effectively. So pretty much what I would do is I would go in, I would basically try to find undervalued assets, obviously like mostly like digital, well, purely digital in crypto, but basically I would try to find undervalued assets and take an activist investor route really to try to maximize the amount of value that I would get out of that to some extent. So I've probably traded around like 50 different Olympus DAO forks specifically. That was kind of the biggest driver initially. And yeah, I started off with 5K on ramps through Coinbase, like most people do. And actually on ramped in Avalanche, like through AVAX, funny enough. First time buying any non BTC slash ETH token. Yeah, before that I was doing phone repair actually, but we'll get to that later.
Yeah. So just to clarify, like you basically got started basically at the pico top of the 2021 bull market, right? You saw like Wonderland TikToks and you just like started aping.
No, it was a little bit after like stuff already kind of started like hitting the fan per se. It was like right around the time of like right like just before like a couple weeks before the UST collapse and all that stuff kind of went down. So it was everything was already like down quite considerably at this point. And yeah, basically like the disconnects between the valuations and the treasuries were pretty much like what I was looking at mostly there.
Yeah. So just to clarify, you did like these RFV plays, right? Like these risk-free
Yeah,
value things where
exactly.
maybe like a project treasury has $50 million of in like stable coins, but the token is trading at like 20 mil or whatever. So you would
Mhm.
just buy the token, go to Discord, demand the treasury be redeemed, and like just repeat this process during the bear market.
Yeah, yeah, pretty much. Yeah, it's I believe that I've done more of those than anyone else. And even back when I didn't have the capital to necessarily take a lot of them myself, like at one point I was like selling a lot of these like different types of trades to people, just like in DMs privately, like nothing. I didn't have like a call Discord or any of that stuff. It's not a grifter. Don't get me wrong. What's it called? But yeah, basically, even when I didn't have the capital to necessarily take a lot of those trades, like I was basically finding them and giving them to people who did like have the capital to take them effectively. And I would basically look for and try to target the smaller ones that a lot of more well-off guys wouldn't necessarily target, and that's kind of what helped me get the most outsized returns. So that's basically how I kind of got from like 5K roughly up to around like 120K ish. And then around that point is kind of the rough time period at which I got hired to like a market neutral fund pretty much because obviously like when I'm not in positions I tend to be just like pure market neutral farming. Basically like my whole thing is I'm always in stables and when an opportunity arises that I believe is like kind of like an outsized market opportunity, I tend to try to like go into that, size into that like appropriately, and yeah, pretty much do everything I can from an activist investor perspective to make sure that those trades end up working out.
Nice. So you just did a bunch of RVs, got to low six figs, joined a fund, and you ended up quitting at some point, right? What's that story?
Yeah, yeah. So I worked for the fund for about a year, and during that time, my port went up to from 100K or so. I mean, this was like kind of the point when I was underperforming the most, actually. Funny enough, and I went from a roughly 120K port or so, something like that, to around like 300K or so at this point. And I quit that fund. Basically, wanted to focus mostly on being like a full time trader slash eventually start my own fund. And I was a full time trader actually since I had like a 30K port. Like basically, when I had 30K, I was like totally living off of it. My parents actually I've been like basically paying rent and living for myself since like the day I turned 18. Pretty much from there, basically after getting to around like 300K or so, this was kind of like around like AERO season ish. So pretty much like Exactly, yeah, Airdrop. Airdrop was probably like one of the biggest wins expressed as a percentage for me. I went from like roughly 300K to like, I mean, I made a decent amount on Arrow. Probably I went to around like maybe 2 mil-ish. I didn't outright buy Arrow, obviously. Again, I'm not really like a directional type of guy. I would size into like Arrow betas. I would snipe like extra five borrows. And I mean, yeah, the extra five borrows were really the big printer there. It was like printing like thousands of percentages of APR. And in general, there were some good betas to buy that did like quite well as well.
I'm just gonna interrupt you here because I understand your on-chain lingo, but the majority of the audience doesn't. But just to flashback, Airdrome is a fork of Solidly that launched on Base Chain, and I also farmed it. I think it launched September of 23, and I like farmed it, and then it pumped like 10 cents, and I just dumped my entire Arrow stack, and then like pumped it to $2, and I was like coping around that. But I think like correct me if I'm wrong, but what you would do is you would figure out tokens that would like have farms on Aerodrome paying like thousands of percent APYs, and you would just like ape.
Yeah, pretty much. Basically, I would try to find ones that weren't necessarily taking advantage of the bribe efficiency relative to their protocol owned liquidity level. So basically, protocol owned liquidity is just like the liquidity that a protocol owned, and the bribe efficiency is basically the multiplier at which protocol can put in dollars and receive dollars back. So pretty much on a week over week basis, the reason that Airdrome was paying like such high yields was because effectively there was a spread between the amount of dollars that a protocol could put in and the amount of dollars that they would receive back in emissions. Obviously, there's rules around this and limitations around it, but at one point it was around like roughly for every $1 protocol put in, they would receive $3 back of Arrow. So pretty much, I tried to position myself as best I could to kind of capitalize off of that principle. Basically, I would find like uh, tokens on Arrow that had a high percentage of protocol owned liquidity, and basically another thing that I would look for was a large percentage of unused supply that they could potentially use for bribing. And pretty much I basically would like size into that. And then I also like went activist investor route on the tokens that I purchased in that aspect too. And I would set up like Territ, Impermax, XtraFi, basically ways of like leveraging down on that and kind of capitalizing on that yield even more. A protocol could bribe a maximum of 5% of their total pool TVL during this time period. So pretty much on a 3x multiplier at a 5% of pool TVL bribe, basically on total pool TVL, that was the equivalent of a 15% return week over week. Obviously minus the 5% on the bribe principal, so it was effectively a 10% absolute return week over week. And then basically there was ways of leveraging down on this and kind of juicing that 10% up to around like 20 to 30%, depending on how much leverage you took. Pretty much I sized into like Territ, XtraFi, and stuff like that. And that was a big printer. And then I played at one point between like my fund and I, we were around like 15% or so of the AERO LP back when it was around like 100 million LP. So I farmed AERO USDC Delta Neutral as well, kind of playing off that because like again like relatively easy to see like the levels at which Coinbase would be like buying it, and I knew like roughly like the metrics and stuff to kind of look for like what they looked for. So I could kind of adjust like the LP around that and minimize like IL. So I farmed like a few 100% APR, so on like good size for quite some time on just like purely farming like AERO USDC Delta Neutral.
Yeah, I remember like we were chatting back then, and you're like, yeah, like I know exactly when Coinbase is buying, so you can just
Yeah,
like you would just like play it that way.
not well. Obviously, it's not exact, but I knew what metrics that they would look for, so I had like a rough idea to some extent of like the point at which like they would be looking to buy pretty much. Basically, one of the things that they would look for. I mean, it's like there's not much of an edge in it now, so obviously I can share a lot more about that stuff. But basically, one of the biggest things would be they would look at the amount of short interest on Arrow versus the amount of total like Arrow USDC in the LP, because pretty much a lot of people were also like farming like the Arrow USDC LP Delta Neutral. So pretty much one of the things that they would look for when they would actually go to buy Arrow is they would look at the amount of short interest relative to the total like LP size. So they would pretty much try to like squeeze out the shorts and kind of use that to fuel their buybacks even further as people like adjust their Delta Neutral LPs and such. Like on the first pump, like around like 50% of the overall Arrow USDC LP was like Delta Neutral farmers, and quite a lot of them basically like got short squeezed the crap out of.
Yeah, no, like I realized over the years that the Coinbase, the base team, like they're pretty savvy, like on-chain people.
They are, but in general, like I think they need to micromanage their stuff a lot better. Like I mean, same can be said about a lot of different things. Like like Bera, for example, has a similar issue. They both AERO and Bera, they pretty much let on a lot of like tokens necessarily not providing any value back towards like the ecosystem or them, that were basically purely there to kind of like leech off of the bribe efficiency aspect. So from that perspective, like I think there's a lot that they can do better. Just from a micromanaging perspective, from a macro perspective, they time their buys quite well. And I mean, yeah, buy timing is really the only good thing that I can kind of say there. That being said, I love Coinbase. I'm bullish Coinbase. I love Coinbase. I love Kraken better. I'm bullish Kraken because my bags are there.
Anyways, like you like ran, 300K ish to maybe like, like 1 to 2 mil, just juicing, all these arrow, like dumping, farming, all that stuff. Uh, After that, like what, like actually, yeah, after the arrow pump, that's like what, like early 2024. What was like your next play to like, really get started?
Yeah, so I mean, after that, it was just like pretty consistent farming. Like I farmed like a bunch of different stuff. I mean, I think I averaged around like 100. I mean, it's a difficult to get the exact number, but I farmed at like a few 100% APR for like after that point for quite some time. Basically, around that point is like roughly when I started my fund. Yeah, pretty much. Fund performed quite well over the last year. Basically, it's a market neutral fund, but we do have like the ability to take discretionary trades as kind of if there's like obviously like free market opportunities that arise, like for example, of something that I would take under the fund. Basically, at one point, Ohm was trading at a discount. It was trading at around 90% of its backing value, and basically, cooler loans were coming out next month, which would allow you to borrow out 95% of the backing value. So effectively, there was a free 5% to be had there on size in 1 month, right? So pretty much what I did during that period is I used Fraxland and I levered up 3x on that with like basically, I mean, at this point I had like around 100 something K. And I basically just like 3x levered on Fraxland and made like around a 15%, or sorry, more than that. It was like around 30 because it went up to like 1 to 1 with backing roughly. Yeah, pretty much made around a 30% return like in that 1 month, like basically like pretty low risk overall, all things considered.
Yeah.
Obviously, like spoke with like some of the big holders to try to make sure that they wouldn't like liquidate me and such. And like I knew Temple DAO had like a limit order and such. After Cooler Loans released and like Temple DAO had the limit order, pretty much like I would basically try to front run their limit order and then just kind of hold it and then sell it off into pumps. And I made a decent amount just like basically like kind of swing trading Ohm around like the rough backing values, buying it like 1 to 1, selling it a bit higher.
Yeah. So I feel like when people hear of someone running it from, like 5K to like millions, people generally assume that people take on like insane amounts of risk, and then there's like survivorship bias, right? It's like some degens like make it off meme coins or whatnot. But uh like talking to you, like you're like very risk averse, right? Can you tell me like about your trading strategy?
I don't think that I've ever had like a month over month drawdown. I don't like on it on being on my own personal funds or any funds that I've ever managed. There was a lot of really interesting trades too that got me from like 5K to like roughly 120. Like I was like looping bonds on like Nemesis DAO for a while when it was like a dead fork and just kind of like playing off like the total like LP size of it. Sierra DAO IRA feed. I put 18K in and I got around 43K out of that. I was like the largest holder of that one.
It's funny because like I'm aware of some of these RV trades, but like I don't even know what those are. So you're like really deep into the weeds. So I guess it's possible to make money in the bear, right?
Oh yeah, 100%. I think if you're not making money at any point in the market, I feel like you're doing something wrong.
Damn, calling me out, man. Just kidding.
No, no, no. I mean, if you have like, it's very different if you have conviction in something and you believe that it's going to long term work out, and you're down on the short term. But if you have conviction that it's going to work out in the long term, then I mean, price going down is just more of a buying opportunity for that type of stuff. But I feel like a lot of funds don't necessarily have that edge or conviction, and they basically just go long on market slash market beta and tend to like lose money as a result. Like, there's quite a lot of funds that underperform relative to like BTC, for example. And I think if a fund is not outperforming BTC, then they have no right to be a fund, personally.
Yeah, I've seen like some funds like blow up recently, and like the market's been generally going up, so
It's also the fact that like running a fund is raising money for a fund is less so about your ability as a fund manager from what I've like seen and experienced, and more so about the level of connections and how much people like you slash trust you. So for example, a lot of these like big Twitter guys like Asymmetric, for example, their fund is down what, like 95%. Like we're farming the Hyperliquid airdrop, bro. Like,
Well,
uh,
I think that was like a shit post. I think that was like fake, but yeah, like that fund
yeah,
was down.
it was fake. It was fake, but
Yeah.
it was funny nonetheless. Like, I think it's a good example of a lot of like funds out there. There's quite a lot of funds that are down. Obviously, there's a lot of great funds out there. A lot of great funds that are up. The point is that there's quite a lot of shitty ones too, and there's quite a lot of shitty ones that somehow manage to raise money. So yeah, it's very interesting to me. And yeah, there's a lot of like LARPs on Twitter as well too.
Yeah. Another question I want to ask is, aside from like farming and RFVing, you also do some like sibling, right? Sibling some airdrops. Can you tell me about your dog trade?
Yeah, so basically there was like this one like super kind of obscure airdrop that I found. Basically I found it by like reading the documents on like how the airdrop actually functioned. So pretty much like they were distributing X amount of tokens to basically people who minted these AI generated dog images as NFTs. Pretty much like basically my numbers came out to be around like roughly $39 a wallet, and the cost per setting up a wallet was like roughly $3. And basically I knew that they wouldn't be airdropping say like $2,000 per real wallet, so I knew that they would be rewarding Cybblers. Pretty much I just had to ensure that my Cybles were effectively higher quality than the other people that were Cybling it, because there was other people Cybling it. So what I did was I got around like 10 or so like high school / college kids together. Pretty much so we basically just like locked in for like 2 weeks, like grinded out, just basically making these like AI generated dog images. Like we were making like Putin ones, Trump ones. I mean, yeah, just a bunch of random ones. Even maybe like I'm sure there was probably a dildo one made for you too,
Thank you, thank you.
of course. And yeah, pretty much we made like 13,000 of these things. And hopefully there's a base airdrop too, because that'd be sick. But yeah, we made like 13,000 of these things. And pretty much we made around like 400K roughly to profit in that like 2 to 3 week period or so. And paid out around a third to them. And then we all went to like Rolling Loud and stuff. Super fun time. Yeah, crazy. Pretty crazy overall. Like we ended up being around like roughly 50%, or sorry, roughly 60% of the entire airdrop. So I mean, not many people can say that they cybled 60% of an airdrop.
Yeah, I bet the chart looks horrible. Everyone's just dumping.
No, I mean, actually, when it first happened, they're basically like the chart was like relatively unaffected when it first happened. Actually, like we didn't really do anything on the chart.
So people were like buying while you were dumping.
Yeah, it actually ended up going up after the airdrop. Yeah, and then trending downwards afterwards. But yeah, I'm guessing the airdrop probably brought a lot of attention on it to some extent.
And you're still like sibling. And by the way, for the audience, like sibling just means that you create a bunch of wallets, pretend to be different people, and then you get like airdrops, right? And like you're gaming the system that way. Are you comfortable telling me like any other civils that you've done in the past or doing now?
Yeah, so recently, same group of guys, we basically like sibbled mega ETH whitelist slots, like the guaranteed slots or whatever. Pretty much like we would basically like socially engineer stuff and try to get like basically create like fake Discord accounts. We buy age Discord, age Twitter accounts, set up like fake people, use different like speech patterns and such. And then kind of like record the test answers for the quiz thingy, get the Discord role, and then basically OTC sell the waitlist slots. If we were a bit earlier, like we would have made like quite literally millions, which actually sucks. Like I'm sure India ate well. I don't necessarily know if there would be like millions for of a market for that, but we would have made quite a lot. I'm sure India ate well. A lot of like we were a bit late. A lot of other people like cybled that. So
Yeah, I feel like sibling is like getting super efficient nowadays. But there's some civils where you got wrecked, right? Like the hyperliquid airdrop.
yeah, so pretty much same again, hired the same guys. We were basically like watch trading on Hyperliquid, like pretty much like very shortly after it first came out. Shout out to Yield Farming. He was one of the guys who like kind of was talking about it early on, kind of put me on there. What's it called? And yeah, pretty much was like basically wash trading that. We were doing it manually and stuff, and got caught for wash trading. And we would have received like, I want to say like probably around $1 million airdrop immediately on launch. I mean, I would have cheated it. I would not have held it, just to be totally transparent. Like I, yeah, I am a big Jeet. Yeah, I mean it sucks, but it is what it is. And I do like Hyperliquid as a platform. I'll say that even though I lost out on like a free $1 million from them, and I do still use Hyperliquid. I like it as a platform. And yeah.
So yeah, I mean that's kind of an your story, and I'll have like I'll ask more questions later. But I guess like going back to because you're a pretty young guy, right? Like, do you mind sharing like
Yeah, 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 of course. Yeah, I'm 22, just to be like fully transparent. I mean, I posted on my Twitter. I feel like it's like relatively known, so no harm in saying it.
yeah, yeah. So I guess you started when you were like 18, 17, or 19-ish, right?
It was around when it was like late when I was 18, pretty much. Yeah, yeah, like roughly like late or like mid to late when I was 18, roughly.
Did you drop out of high school or did you just not go to college?
Yeah, no. So I actually went to college back when I was like 15.
Oh, okay.
Just a community college, really. Nothing like crazy there. And then I got it like with my 2 year degree back when I was like 17. I mean, obviously, like some decent schools like got accepted to. One Ivy League school that I got accepted to that I was quite considering going to, but I ended up not going back to like 4 year school. Basically, like I mean, for young people my age, for like effectively like if you run the numbers on going to school versus not going to school, if you don't necessarily like have like a full scholarship or have to go into debt. Basically, if you have to go into debt to pay for school, pretty much the cost of the debt on average, I mean, obviously it varies based off degree type, based off which school you go to. Effectively, I calculated that like statistically on average, based off average incomes, and not even counting investing the difference, that it wasn't necessarily like worth it for me. So that was kind of like the biggest driver in why I didn't actually end up going to like a 4 year school. Pretty much, obviously, it proved to be like quite good. But yeah, it's like if you just work minimum wage and invest the difference and live below your means, I think if you have the self control to do that, then I think in the long term that you can potentially make more money than if you had gone to college. I mean, a controversial take, but
Not financial or life advice, but yeah.
yeah, it's I mean, it's not advice. Like I'm not disencouraging anyone from going to college, obviously. And I think college is a good thing for a lot of jobs, and I don't think that this is good for most people because I don't think that most people have this. Like at one point, I didn't go outside for like 2 months straight. Like I was just like totally locked in.
What do your parents think of all this?
So my mom still thinks it's fake to some extent, and my dad's been pretty supportive. Yeah, like my grandfather and my mom both told me that I should quit and not do it.
Didn't you get like kicked out or something, or who's that?
Yeah, yeah. Yeah, I was like homeless for a bit, like sleeping in my car. Yeah.
How did you trade internet coins in your car?
Just like off the computer, like I had a hotspot on my phone and stuff. But again, that was only for like roughly a month. It wasn't like a long period of time.
Well, yeah. Well, I appreciate the story. I think it's a pretty wild story. I feel like a lot of people nowadays, they kind of like glorify. I'm not sure glorify is the right word, but they kind of idolize just like hyper gambling, and high leverage and like meme coins. But
Especially with like TikTok and like kind of how popularized gambling is. Like especially like these like people like XQC, Toji, like a lot of these guys, Trainwrecks, like basically there's quite a lot of like gambling streamers and like pop culture icons, I guess you could call it to some extent, that influenced the younger generation kind of to actively get involved with like gambling, predominantly like online. Yeah, but I think a lot of like physical casinos are kind of gonna go down the shitter, and I think like online gambling is like trending upwards for sure. Especially as like kind of like the older generation ages, like online gambling is like a lot more predominantly kind of found among like younger people. And yeah, it's like basically it's kind of pushed as like a cool type of thing. Like you see like TikTok guys like Togi basically like I'm gonna gamble my entire net worth and put it on black, which I find is hilarious. But I don't necessarily know that it's a good thing for a lot of people. I'm quite against gambling in general, personally.
and like you said earlier, maybe you had like maybe 1 or 2 months, but like you mostly had no months of drawdowns, right? Like you just
Yeah, yeah. I don't. I mean, I don't. There's been like some months where I haven't necessarily ran numbers on it, but as far as I'm aware, I haven't had like a single month drawdown on my PA, and I've never had a drawdown on any funds managed in general.
Yeah. So I guess, I feel like it's hard to meet people like you. I know a few others that have very little drawdowns, but they still have drawdowns and whatnot. Yeah. So I guess like, do you think that's like a big misconception in crypto where for you to make money, you have to take on like insane amounts of risk? I mean, I guess you did take on a lot of risk, right? Like you did all this activist stuff that wasn't really guaranteed to work. Um, but is it possible to like just make really good returns?
Yeah. But I mean, to some extent, it's like in general, I like to take trades that I can to some extent control the outcome of, or know like a rough idea on the outcome of. I don't like taking trades that I don't necessarily know like the outcome of to some extent. It's very difficult to beat a machine, like to kind of like outpace a machine that just consistently compounds at like 50% APR or so. And especially so when you can kind of like shove that type of stuff like into market opportunities that are like even more outsized than that. Believe it or not, I've actually made like a similar amount in like equities as I have crypto actually. I bought Circle, and I got my fund clients in on Circle, like roughly like 1 to 1 month and a half ish before the actual like IPO actually happened. I believe it around like a 5.5 billion valuation, and I mean, yeah, obviously that did like quite well. I mean, that was like a like very like outsized market opportunity, and kind of just did a similar thing with Kraken recently. And obviously, like I think there's some other stuff that's coming up that I think we'll do quite well on. Yeah, in general, I do think it's a quite a common misconception that you need to take outsized risk in order to generate like good yields in crypto. I think the biggest opportunity in crypto isn't actually like the gambling aspect of it or like gambling directionally. I think the biggest aspect of it, like that I kind of see as like the largest opportunity, is effectively like there. I mean, for a while, like pretty much there was like you could very like low effort get like 50% APR like market neutral on chain. I think that was like by far the largest opportunity that crypto kind of had versus like bonds paying like 5%. Like in general, like that was kind of like the most glaring opportunity to me, besides like basically the massive value disconnects and the lack of funds kind of taking advantage of those value disconnects on chain. And yeah, I mean, I was running like 50 different Discord accounts at one point, basically like trying to figure out like ways of kind of capitalizing on those like value spreads and kind of influencing like different trades
Oh,
to necessarily like
I
happen.
see.
Yeah.
So would you have like 50 accounts, go into the Discord and pretend to be 50 different people
Yes. Yeah.
demanding for the same outcome? And
Yeah.
the
Pretty
and the
much.
community moderator was like, "All right, like."
Well, no, the community moderators would usually ban you after the first sentence. Community moderators are yeah, yeah, it's like speaking negatively about the project, banned.
Yeah, so I guess, if you could go back in time and like give advice to your younger self. I mean, you seem fairly successful, but like, would you change anything, that you've done? Like, were there yeah, yeah, have you had like any mistakes?
Yeah, I would tell my younger self to like yeah, I would tell my younger self to buy Bitcoin. Yeah. Yeah, it's like I mean if I was earlier, like I feel like I would have made like quite a lot more, especially during like DeFi summer or whatever it's called. If I was like kind of around more, like if I was like around like back then, like and like if I was like around like kind of earlier in crypto, like I feel like I would have made like quite a lot more and kind of cleaned up during that period. So like I definitely do regret that I wasn't like kind of earlier to this stuff.
I mean, have you had like any big fumbles? Like, I mean, aside from like maybe not getting like the hyperliquid airdrop, but it sounds like you haven't had any like big losses.
Well, I mean, I think I fuck up a lot and sometimes on like execution or not taking specific trades that I see that are like very very good EV. For example, yeah, I think in general like there. I mean, that's like currently ongoing, but I don't want to like necessarily talk about that one. But in general, I think that there's a lot that I fuck up on in terms of like actual execution. I think I do quite well, obviously, but nobody's perfect. Like I think that there's a lot that I can do better in general on, and I think that there's quite a lot of trades that I've missed just because like I was too risk averse, like to necessarily take the trades, even though like I mean a lot of them were insanely high EV or like close to free money. Like there's just quite a lot that I didn't necessarily take, and I think that that's something that I potentially need to work on, like just being willing to take more trades in general that are like high EV.
Yeah. So speaking of those high EV trades, like what exactly is your research process? And you also mentioned earlier that you only like to make bets when you have a pretty high degree of certainty, where you can kind of control the outcome. So can you kind of answer those two questions? Like how do you research, and then what are the characteristics of those types of trades?
Yeah, I mean, the research process like really depends. Like the best way to do research is to talk to the teams. To talk to the teams, to get to know the teams, and to try to become like friendly with them, know what's like going on, be in the know, and yeah, just basically being willing to like talk to a lot of people, work with a lot of people, and yeah, just being nice in general. I think is like the best like thing because like basically like you may have an edge in a certain area, but there's going to be other people around you that have edges in different areas, and you can't necessarily hit every single market at once. So if you know people that are hitting different markets than you, for example, like if you're running like a liquid fund, basically there's going to be other people in VC who have different specialties than you, who have different market opportunities available than you, and basically like trying to talk to as many different people as possible, trying to meet as many different people as possible, and just kind of generally trying to be in the know as much as possible is going to be like I feel like the best research tool for people. Yeah.
Yeah, and I think we're both part of some, Discord, DeFi, on-chain sleuth communities, and I feel like these people, it's like the same people, right? It's like they all did RV stuff during the bear. Who knows? Like how important is like the community aspect or like finding your own group? Like how did you find your own group? Is it just through time and like being Discords?
Yeah, I mean, yeah, it's kind of happened through time. Just basically being around in a lot of like these different trades I would find. For a while, I was doing it solo, and pretty much like I would do all my own research, find everything solo. I mean, I still do all my own research, obviously, and but there's quite a lot like trades that will come up that I didn't necessarily do the research on or find the edge on. Not an insane amount, granted, but there's some that come up that like I didn't necessarily do the research on myself. But obviously, I would do the research on it, and I do my own DD obviously on any trade that I take. Like pretty much, yeah. In general, I was doing it solo for a very long time, and would come across like people doing like similar type of thing, and just kind of happened. Like we become friends. Joined like back before like Yields and More, for example, was a thing. There was a server called Stable Yields, and I met a lot of like farmer guys from there. Back when I was doing like a lot of like market neutral related stuff, just kind of like met a lot of guys from there. I mean, that's how I met like yield farming as well. Actually, I just mentioned him because I know you've had him on. I know your like audience kind of knows who he is.
Yeah, no, I feel like I onboarded so many people to like DeFi in 2021, and like some of them are just like so much more successful than me. I'm like, damn, like these guys are insane. And like the follow up question I have is, obviously this is your pinned post on your Twitter, talking about your journey, and then the follow up question I got from the audience was, I guess October last year you were sitting like around 3 to 3.5 mil, and
Yeah.
now got to 10, right? So
Mhm.
like what were one of the bigger contributing bets? Maybe that like ones you haven't really talked about yet.
Yeah. So, I mean, obviously, besides like compounding and just continuing to farm, I think some of the bigger wins that I've kind of had during that time period were Circle. Circle was a solid one. I kind of talked about that. I made like a bit under 2 mil on that. I bought like very briefly, like pretty shortly before IPO. Kraken was another big one. I bought pre-markets pretty decently, and a decent amount on Kraken as well. I white-hatted a $23 million exploit. That was definitely another contributing thing, and I received like a decent bounty for that as well.
Can I double click on like what get more color on the white hat hack thing?
Yeah, so pretty much, I found this actually within 15 minutes of it existing. There was pretty much like a bug that basically let you use two different wallets. You would deposit, you would receive the A token on wallet one. You would deposit, receive A token on wallet two. And basically, from wallet two, you could withdraw your A token, and it would remove all the underlying collateral from wallet one. And basically, this was an issue with direct deposit feature versus the Zap feature, or yeah, the direct deposit feature versus the Zap feature. Zap feature is built in the front end. Direct deposit was not. So basically, you could use the direct deposit feature to kind of like make this happen. And then basically, after you remove the underlying collateral on wallet two, you still have the A token on wallet one, which you could then go ahead and use that to borrow against it. And yeah, that was kind of and it had like a 25 mil cap on that. So that was kind of like the principle behind like the actual exploit there. But in general, I found like around 8 different exploits. And I've actually gone ahead and like exploited like 2 other ones like Whitehat as well. Most of the stuff that I find though is predominantly like market manipulation related. Like this was one of the first smart contract related exploits that I've actually like found myself.
You find a bug and then you report it to the team and then they're like, oh, thank you, and then they give you just like money, right?
Yeah, I mean the ones that I've done, I've actually gone ahead and like actually like exploited it and then negotiated for like the white hat or whatever.
Oh,
Yeah,
interesting.
yeah, and it's like obviously it's quite a considerable amount less than like 10% usually, just because like I'm doxxed, basically well, semi doxxed, and I mean, yeah, it's like, yeah, it's usually quite a lot less than 10%. I more so just happen to stumble across them more so than like actively like looking for them. Because like basically any smart contract that I touch or interact with on stream or on my personal or like under the fund, I obviously like have to do like proper DD on it and like ensure that everything's like kind of good there from any like market manipulation related stuff or like smart contract vulnerabilities in general. So when I'm kind of in that process and like looking at stuff like that and just kind of looking at a lot of these protocols in general is just kind of how I stumble across this type of stuff more so than like going ahead and actively looking like, hey, how can I exploit this or how can I exploit that?
Like, I'm curious, like, what's the negotiation process like? Like, I know, like, whenever, like, a bridge gets hacked, there's, like, randomly, like, on-chain messages. I guess you can, like, just talk to the team, but
Yeah, no, dude, I just talked to the team over Discord/Telegram. Like, yeah, I don't do it on chain or anything. Like,
it's like, wait,
yeah,
wait, do you just, like, DM, "Hey, like, I just took, like, 10 mil, like, can I have
yeah, pretty
800K?"
much. Yeah,
Like
yeah,
and do they just are they okay with it, or
yeah. I mean, it depends. Like, usually for me, I just try to work like within reason, like what a team can do. I'm not like usually like I don't try to be like too extractive from like any team that I usually white hat. I mean, again, I've only done like three different white hats, and like two of them were like not huge. But yeah. I mean, in general, like just message the team, kind of see what they're like willing to do, see, try to work with them and figure something out.
I mean, the fact that, you can spot these fairly easily, that does that kinda scare the hell out of you? I mean, you mentioned that, you do proper DD and, like, due diligence on, like, every single thing, but, it's just that, like, there's so many potential exploits and, like, hacks in crypto and DeFi, right? How do you justify, like, risk that way?
Yeah, in general, I think it's like anything like with like a weird type of system to it, I think is best to avoid. So, for example, if somebody creates like a fruit based stablecoin, like usually it's or like a McDonald's based stablecoin, like usually that type of stuff is better to avoid unless like you know the team personally and like can kind of like justify the risk to some extent. In general, like I try to like maximize EV/Sharpe ratio from like a market neutral perspective. So it's not that I take no risk. It's that I tend to maximize the edge that's available pretty much. Position sizing is also like quite important in that aspect. Like for example, like on the fund/stream, I never have more than like roughly 7% of book. Well, stream is like maximum 7% of book allocated to a single position at the moment. Besides a position that we have like insurance on.
So speaking of edge, you mentioned that, you made a bunch off of like circle, like these IPOs, like these stocks, and you did a bunch of, like, I guess, like farming, delta neutral, like white hacking and whatnot. Where do you think the edge is at, like right now in crypto? It feels like it's been really hard to trade altcoins generally. So
Yeah, so pretty much like the barrier of entry for a lot of funds being involved with crypto is like gradually waning. I feel like, especially like on chain. So I feel like over time the on chain edge is going to just basically decrease and decrease over time because as more and more of like funds kind of come on chain and the barrier of entry gradually decreases. Basically, there's going to be less like uh, edge or yield to necessarily go around in that aspect. Pretty much like there's quite considerable amounts of onflow in terms of like money and capital looking for market neutral yields. So as a result, that tends to dilute market neutral yields overall / like on chain yields in general. Like for a while, like it was like around like 60%, like for a year, like very very easily, like pretty low effort, and you could do that like on size. Like now, like I want to say most farmers are probably doing around like 15 or so. Well, I mean, obviously it depends on like the strategy, but say you're buying PTs, it's around 15. At one point, buying PTs was around like 50. It was pretty wild.
and I guess like with Pendle, so just for the audience, like, with Pendle, right? People speculate on the yield, right? Buying the YT token because of like the potential airdrop and whatnot. And then people like Law can go on the other side and be like, all right, I'll take my fixed yields on Pendle, get like 15%. And
Yeah, I mean, I think there's times when it makes sense to buy YTs. Like for example, when like the YTs are priced like very similar to like the actual like base yield, and I think it makes a lot of sense to do so. And I think there's like good trades in buying YTs, but albeit the market's like very thin. However, I think most of the time it makes sense to buy the PTs. Although in this market environment with again so much capital looking for market neutral yields, I think that there's some YTs that are worth buying at the moment. I'll let people speculate as to which ones, but yeah, it's not level. I'll say that.
Well, like I guess as more capital flows into crypto, some at some point like your edge will erode, right? Like how do you think about that?
Yeah, basically like I mean, I think I'll tend to have like a lasting edge just due to like how chronically online I am. Like if I don't have an edge, then I have no point in managing capital. Is kind of the way that I see it. Over time, like obviously like edges, eh, there's going to be more and more money looking for market neutral returns. So it's going to get more and more competitive over time. Is the best way to put it. If you don't have an edge, then you have no point in managing capital. And I think that there are funds that don't necessarily like have an edge per se.
Yeah, I guess like in this world of the eroding edge, if an aspiring trader, someone that's like watching this video is looking to go from, mid five figs, low six figs to, like seven, like seven figs, how would you go about them? If you had to start all over again in 2025?
Yeah, I would say biggest thing I would say is like I don't think that people should have like a number goal in mind necessarily. I think people should kind of be opportunistic as to what the market kind of provides for them. I think it's difficult to like necessarily project like future returns because everything is so like opportunity driven really. You don't want to like force trades. You don't want to like be like I feel like the market's top tier. I'm gonna go short for my net worth. Like you don't want to force stuff and do stuff like that. Don't gamble. Basically just like farm, generate good market neutral yields. When you find something that's worth taking, that you feel like you have a genuine edge on, try to basically like depending on like the risks of it, depending on like how much of an edge you feel like you have, try to size in appropriately and kind of capture that edge. And then just yeah, don't force trades. Like be happy with 20%, but obviously shoot for higher.
Yeah. So, like, would you say your style is like maybe 90% of the year you're just farming 20% yield, let's say?
No,
Uh,
I really wouldn't say 90% of the year. Like, I feel like if anything, like I've made quite a lot more being like basically taking outsized trades, like as to what the market offers. I've made quite a lot more doing that than I have on farming. Basically, like I've made a lot farming, granted, and I've probably averaged like very high returns relative to like farming yields and such. But I think yeah, I think there's a lot more money to be made like trading directionally, and I think that you should try to if you find an edge on it like a directional bet, then I think that you should try to take that.
but I guess, of course you can make more money directionally, but you can also lose money, right?
Yes, yeah, that's why I say like don't force stuff. If you find like free money type of trades, take those, size in, don't risk capital. It's like if you lose 50%, you have to make 100% to get it back. Yeah, like capital preservation is super important, and consistency compounds. Like that's like the kind of the biggest thing. Like
Yeah. Do you think people would benefit more from that approach? Just, be very, very selective, stable, denominated.
yeah, I 100% do. I don't think that like I think that the people that do that are the people that tend to on purely on average. If you take like a sample group of people, if you look at like meme coin traders, people who trade perps and farmers, I think you'll find that farmers and average like the best annual returns out of any of those groups by significant margins. And I would argue that meme coin traders and perp traders probably lose money if you look at the group size on average. Versus with farmers, I don't think you'll find that. Although there's going basically like there's if you look at it like a chart, like there's going to be quite high variance in terms of like the actual like returns. Like there's going to be people that get zeroed out trading perps and meme coins. There's going to be people that make a lot more outsized returns, and you're going to more so hear about the people that make quite outsized returns on like Twitter and stuff like that. But you're not necessarily going to see like the other side of the coin there. And again, it's like if you look at from an EV perspective, and if you look at it from like a sample group perspective, you'll find that farmers on average make the most money out of any sample group from what I've seen. Farmers slash like people that are kind of running at stuff with a similar approach to what I do.
Yeah, no, like I've definitely, observed over the years that like farmers, like they're very extractive, right? It's like people are speculating on perps, they're speculating on YTs, and then farmers just take the other side and like just dump tokens.
I actually really don't think it's extractive at all. I think if anything, it's providing market efficiency. Like I think farmers effectively get paid based off the level of market efficiency that they can provide. If people are buying up the YTs, for example, on a PT, say say level USD, for example. The PT, like basically the implied yield should be like for level USD should be like 1% maybe, because it's not an earning asset, and like it's purely points, purely speculative, and like there's, I mean, yeah, it's in my opinion, it should be probably like 1 to 3% range. Instead, it's like 10% range. Why? Because people are buying up the like people. I mean, obviously, there's more reasons to it, but just for this example, sake of argument case, like why say people are buying up the YTs? Say people buy that up to 50%, right? Who would be in the wrong there? The farmer buying the 50% and leveraging down on that to basically make markets more efficient and give people the ability to buy what they feel is an undervalued asset at less of a valuation, or yeah, I mean, it's in general providing, like farmers in general provide more market efficiency, and basically get paid for doing so.
And I guess people love to gamble in crypto, right? And then farmers can just monetize that.
Farmers effectively take the casino side to people gambling. Like that's effectively what a farmer is doing to some extent.
Yeah. And I think, we chatted a few times, and then I guess like one of your rules is like don't gamble, right? Like, are there any other investing slash trading rules you live by? And I guess can you like specify like what you mean by
Well, I gambled. I've gambled like twice in my life. I walked into a casino and I put $500 on black, and I won and I left. Uh, and I was just like with a friend, and we were just like messing around pretty much. And then sometimes like if I'm like say I'm like with like friends and stuff like that and trying to have a good time, I'll kind of view it as like money spent for the cost of like having a good time. So like I'll you can just calculate out like say your average bet is this, say you make this many bets an hour, um, based off this EV, what are you losing on average per hour, and you can kind of think about it like that.
yeah. But I guess like when it comes to markets, you don't gamble, right? Uh,
Yeah, I'm not much of a gambler. Yeah.
yeah. Are there like any other trading rules you live by? Like I never do this. I look for that, stuff like that.
Well, I mean, I think the yeah, I mean, I don't think rules are like, I try not to like go by rules. I think as a trader, you should try to be as open minded as possible towards like being wrong, towards like different things happening, um, and basically just be open minded and willing to kind of adjust based off of new information. Like I think if you approach things from like a closed minded standpoint, where like I can't do X or I can't do Y, then I think it tends to like hold back your overall performance in general. Like, and I think being willing to admit like when you're wrong about something is like very important as a trader.
Like the next question I want to pivot to, or topic, is these digital asset treasury companies, because you're known for the RV stuff. Yeah, you're known for the RV stuff, right? So flashback, you would buy stuff below treasury, you would take an activist role, redeem it, make money. So I've noticed that this is the MSTR premium. It's starting to go down. It's still like 1.3, 1.4, but it's starting to come down. And then the strategic ETH reserve that I mean, this website isn't completely accurate, but the MNAVs for Bitmine, Sharplink, these ETH treasury companies are also starting to go down. So, like, what is your plan? Of course, we can't predict the future, but do you have a plan for when these companies inevitably trade below NAV? Do you think there's like some profitable trading strategies available during the bear market?
Yeah, so I think there's going to be a lot of opportunities for like RFE around those when the time comes. I think it's obviously going to vary like based off of like different DATs who's like running them, their approach to it. It's yeah, it's going to vary, but there's going to be quite a lot of opportunities to make a lot of money like buying these things below like quote unquote RFE value, and figuring out ways of like realizing those value out of it. But I think the people that are going to make the most on that are both insiders and like activist investors to some extent. I think like retail, if they're just like blindly aping these things below treasury value, I mean, if it's enough of a discount, like by all means. I don't think people should make blind bets on it, because effectively some of them don't have a mandate that they have to like sell. Don't necessarily have a mandate that they have to sell off the underlying to buy back the stock. That's why I'm saying it's going to vary pretty greatly based off like different teams and their approaches to stuff, and kind of who gets involved with that.
Because I guess like the opportunity is that if something's trading at like a 50% discount, then you can buy the stock and then short the underlying, and then just wait for it to wait, or just wait for the RFV, right? It might take some time, but if you're operating with size, like that could be like a pretty good strategy.
it'll kind of come down to like GBTC slash like ETH type trades. Like there'll be a discount. People can like short it on perps, long it on spot on the stock or whatever. Like short the underlying that is. And I think there's going to be some good opportunities there for sure.
Yeah. And speaking of which, it sounds like your strategies, it doesn't really matter if we're like in a bull and bear market. Of course, it's easier to make money in a bull and whatnot, but how do you think about how much time is left in the cycle?
I don't want to talk about something that I am not the best person to talk about on it. Like I think there's better people that can answer that question better than I can. So yeah, I don't necessarily know whether or not a cycle is going to end, when it's going to start. I'm not gonna like pretend to be something I'm not. I'm not a directional trader. And I think I think in general there's probably better people that are better suited to answer that question than I can.
Yeah. No, that's a very 0x law answer. No, I respect it. I guess like going back to what you said earlier, right? It's like, you I guess like your parents were somewhat supportive, but you still did it anyways. You actually left the firm that you joined during the bear to start running it up with like 300K. Like so like how did you have that belief in yourself that you can do it, right? Despite, being relatively young, was it like naive confidence? Like
I would look at like what different funds were doing on chain and what different people were doing on chain who had money, and I would just basically like I would see everything on chain and realize I have a massive edge, and a lot of them are ran quite badly or poorly. Pretty much, like I realized that there was a lot of opportunities, and when I went full time as a trader, like basically I had 30K, right? So in my mind, it was like if I lock in and just put all the time that I spend on working, like because I was working like minimum wage doing phone repair at the time. So from my perspective, it was like if I lock in and just basically uh, work, like looking for outside market opportunities, alpha during that period of time, instead of just working like a normal job, would I be able to make over 30K a year? And during that time period, my answer was 100% yes. So not only that, but it had uncapped upside. And pretty much like I just always like had faith in myself, and I think that's very important.
my next question to you is like what are your views on crypto, right? Because from like a financial gain perspective, it's like it's an amazing market for you. But do you actually believe in the crypto vision? Like are you in crypto because you're here to make money, or like how do you approach the industry?
So I actually used to be a pro esports player at one point. And the kind of the way that I see it is like I really enjoy it overall, and I really enjoy like kind of like just this market. And I mean, I taught myself like everything that I know about like finance for the most part. Yeah, so I tend to enjoy it a lot. And in general, the kind of the way that I see it is kind of like ELO type of thing, and like a video game, like a ranking system type of thing. Like it's like that's why I like DBank. It kind of like lists out people's numbers, stats, like what's going on, like what they're doing, and it's like I love that crypto is like very transparent, and it's like there's not like bullshit, and you can kind of see what people are doing at any point in time, and what takeaways that you can have from other people's portfolios that are intelligent, and like what's going on, like, and yeah, in general, I tend to approach it like that. In terms of crypto, in general, like as an industry as a whole, I like the ethos of it. I tend to like have like I'm very for like personal freedom. I definitely fall under like pretty far under like right wing economically. Obviously, I have like a lot of like socially like moderate policy in terms of stuff like that. But in terms of like personal freedom, I would consider myself like very like quote unquote like libertarian in that aspect. So in general, like I'm a big believer in like the ethos of crypto as a whole. Although as an industry as a whole, I think it's like rife with scammers and grifters in general, and I quite hate it. I quite hate that aspect of it. Like there's quite a lot of like people and like even like major financial companies and funds who will scam like anyone for $1, and it's like that's really the one thing that I quite hate about crypto.
I guess like speaking about like yourself, right? Like what are your life goals? Like are you gonna retire at all? Or, you mentioned that you view this as it's kinda like an ELO video game, right? You love it, so you do it and,
Yeah. It's like if I was planning on retiring, like I would have probably done it by now. I don't plan on retiring like ever. Even when I'm like old and stuff. Like I just want to find stuff that I enjoy doing, and just continue doing that really. and I enjoy like building stuff. I enjoy like trading in general, and yeah, I enjoy like the whole aspect of it. Like obviously, like there's times when it's like stuff isn't moving as fast as I want to, and I need to have patience. And I see other people outperforming me, and it's like sometimes you can feel depressed about that. But at the end of the day, like something I tell myself is just don't be a bitch. Just
Yeah, I did tell myself about that too. Yeah, comparison's a thief of joy. Sometimes you make much, sometimes you don't.
yeah, it's like you see, it's like yeah, sometimes people are going, there's going to be people that outperform you over a certain period of time, and you're gonna watch people that are around you go from say like 500K to like 5 mil in like the span of like a month, right? And obviously, like they're gonna do it in different ways. They may take more risk or they may take less risk, but you're gonna at some point in time, it's going to happen. You're going to see people that over X period of time outperform you, and basically you're gonna see that, and you're gonna be like, you're gonna think to yourself like, damn, like why am I moving so slow? And or I mean, if you're like a perp trader, for example, like how did I lose money? Or a meme coin trader, I feel like most of them like I tend to have pretty massive drawdowns, so it's like I'm sure it happens to them a lot more, but yeah, in general, like something I tell myself is just don't be a bitch, keep going, and yeah,
I guess, yeah. So, Law, thank you for your time. I think you have an interesting story. I think it could be motivating for a lot of people, right? You can get started at any point. You just have to grind. You can meet people through Discord, Telegram, Twitter, and eventually carve your own path. But like, do you have any advice, for someone that wants to quote unquote make it? Like it can be anything, but do you have anything that you want to like leave the audience with?
yeah. Don't gamble. Find opportunities that have high risk return and try to capitalize on them while being mindful of like position sizing and risk. I think that's the best thing. And just don't gamble.
Just don't gamble. Yeah. I feel like crypto is like a gambling industry, right? But I guess because there's so many people gambling, you can take the other side and be a farmer and just enjoy humble returns. I need to do some of that. I have a mix of humble and degen Taiki, and then sometimes it works out, sometimes it doesn't. But
Yeah, I mean, dude, that's the most fun way to do it. Like, I'm sure that you enjoy it. Me personally, I do. I always have my trading bot plug in.
trading about plug, so like does it vibrate when there's like a 5% drawdown, and then you just like wake up at 4 a.m.? Is that how it works?
Yeah, exactly. Like, basically, yeah, I have like a big dragon dildo right next to me too. Yeah, I have a big dragon dildo next to me, and whenever there's a market drawdown, yeah, it's automated to just like go right in, you know.
Go right in. It's just attached to your chair. It's like
Yeah, exactly,
you're it's like everyone at your firm, at your fund has it.
exactly. Yeah, it's a necessity in order to be hired.
There you go. All right. So I started at a good trend. I started a good trend. Like these things.
You did.
Yeah.
Use that as the thumbnail, or not the like the Twitter clickbait, the
Yeah, there's actually like meme coins like made like it's called like Taiki's green dildo or something. Anyways,
oh,
anyways.
have you seen Polymarkets? People bet on
Oh
the
yeah.
with the, like, dildos being thrown at the WNBA games.
Yeah, yeah, yeah. No, there's like an interesting arb. If you want to talk about like risk-free arbitrage, you can smuggle like a dildo in.
Yeah, no. If I was just starting off in crypto and I saw the Polymarket thing, like that is a trade that you can make happen. Like there's definitely a trade there. If I didn't have money currently and I wasn't really worried about that stuff, I would go to the game, bet on green, and throw a green dildo for sure.
Yeah. No, like I've been like fairly active on Polymarket recently. I feel like do you think they'll airdrop? Like what odds do you think? Or what odds would you give for an airdrop?
Yeah, so I'm actually running some like market making type stuff and on like poly markets like slash like all the competitors like Kalshi and all that stuff too. In general, I do think there'll be an airdrop. I was actually like I actually knew what poly markets was like in the 2020 election, but I just didn't use it because like at that point like I was just like kind of watch politics a little bit and like poly markets was like one of the best ways to kind of bet on the election. I mean, yeah, they've been around for like quite some time. But it's cool to see them finally getting traction. Cool to see like prediction markets getting traction in general. I think it's a great model, and I quite like it. I tried to buy like Polymarket's equity and flip it like last month, but it didn't end up really working out.
As in like you couldn't get a slot or it didn't pump the way you thought it would?
As in the valuations didn't make much sense.
Oh, interesting. Didn't they raise it like a 1 bill val recently?
Yeah, yeah.
I feel like that's fairly low.
No, like the secondaries were selling for substantially higher. Like, yeah,
Got it. Yeah, yeah, yeah.
like I was trying to buy at like 1.2 or so. But yeah, secondaries were selling at a considerable amount higher.
Yeah. I feel like for the most part, airdrop farming is mostly kind of solved and it's hard for people to do. But I think Polymarket could be the last opportunity.
Well, I mean, in general too. Another thing that I think in general too is like people don't price in airdrops now. I think people just view it as oh, like airdrop farming is like all priced in. But if you look at it from an APR perspective, I don't think people really look like price in airdrop APR into like their yields in this environment. I think people are purely looking at liquid yields right now. Um, and I think that it's going to cause like some things where people are looking at like stuff from an airdrop perspective as well to kind of outperform.
Yeah. And like it's I mean, I don't want to say it's easy to make money on Polymarket, but there's a lot of inefficiencies on Polymarket. I feel like there's not enough capital chasing these opportunities. So I'm just like making like, you know, fairly easy money. Of course you can't get that much size, so it doesn't scale that well, but I think if you're like an aspiring trader, I feel like that's definitely somewhere you should look at. Like all these tokenless prediction markets, like surely there has to be.
Especially if there's like prediction markets where like you can make the bet happen, like Polymarket's like throwing the dildos in the WNBA games. Like I feel like that's no, like I'm not even joking. Like I genuinely feel like that's probably like if you had small size and like like if you had the conviction and ability to go and do that, like that's probably one of the best like risk adjusted trades you can kind of do. Like assuming you can make it happen.
Make it happen.
Like I would actually genuinely do that if I like didn't have money. Like I would actually do that.
No, that's the other thing with prediction markets. Like it can create for like adverse outcomes for like certain things. You know, like if you can like, for example, if it was possible to like make 5K with like the green dildo or like the dildo market on the WNBA games, then you should be willing to like bribe like a security guard to smuggle. You just give him like $1,000, right?
Yes.
Smuggle a dildo in,
Well, I mean,
throw it
dude,
in.
just put it in your pants. Like,
It's like
um,
my size is size. Don't touch me.
size is crazy. But yeah, it's like for example, like there was markets where you could bet like that a blue dildo would be thrown, and you would get like 16x your money. So you could have literally gone to a WNBA game, bet $5,000 on blue, paid for the ticket, threw the blue dildo, and made like 100K. Like, yeah, it's like it's actually a good trade, unironically.
No, no, no. I think it's a fantastic trade. You know,
It reminds me of that one streaker during like the World Cup or whatever. Basically, the guy bet that someone would streak during the World Cup game, and he bet on himself doing it, and he made like I think like $1 million doing that, and then he got fined like 40K or something like for doing it.
that's a fantastic arb. And then you go to jail for like 2 days. It's
But
worth
the
it.
guy, yeah, the guy was like a course grifter guru guy, mind you. But basically, he was super smart in how he did it, and like he like put words on his chest and like used it for like marketing purposes as well. Yeah, fuck TJR trades, fuck Brez Scales, fuck all the course seller gurus.
All right. Well, anyways, thank you so much for your time, Law. I mean, I already asked this, but you know, because we got kind of derailed, or we kind of went on a tangent with polymarket stuff. Like any actual final words that doesn't have to do with sex toys.
Just use stream.
Just use stream. Actually, yeah. Do you want to talk about stream? Not financial advice. Not financial advice.
Yeah, so pretty much, I started like an on-chain market neutral fund, effectively denominated in whatever asset a user deposits. It's called Stream Finance, at Stream DeFi on Twitter, and pretty much, basically, it allows for one-click yield, made super simple and tokenized. So pretty much, a user can deposit USDC, ETH, BTC, or euros, and they basically get yield paid out super simply, and there's DeFi integrations built out on top of that that kind of allow for further improved yield as well.
And is there a points program?
There is. It is not public, and all the points are tracked on the back end, but there is a points program, and it should be quite good. I'm farming it myself across multiple wallets. Yeah,
You're civiling your own project?
I am. Well, I'm not sibling it. I've just like spread it across like multiple wallets. Like, yeah.
Yeah. Well, it's okay. Like, you know, because you're a Sybil farmer, you know how to prevent other Sybils, so it'll be a fair
Yeah,
airdrop.
I'm not going to be rewarding Sibblers at all. There's no benefit to Sibbling. I'll make that pretty clear.
Thank you, Law. Thank you for your time. And where can people find you?
I am at OXLaw on Twitter, at Law Beats Woman on Discord.
What? I did not know that.
Dude, check my Discord. I'm at Law.
Oh my, hold up. Let me check this. Oh my god, dude, you're right. Oh, Jesus. All right, all right. Time to wrap it up. Time to wrap it up. Thanks, guys. Hope you guys enjoyed the episode.